Hello, everyone. Thank you so much for joining us again for our weekly wrap-up. My name is Jeremy Cronemeyer. I'm the Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Hey, Graham, I know you were out last week, so what happened in the market?
Yeah, I think a lot. I was missing some fireworks, literally, I guess, at some point. Yeah, we had some geopolitical, some tensions over in the Middle East, putting some pressure on the markets. Also, some concerns about interest rates in the path of hopefully lower interest rates, right? So we saw really equities across the board really pull back. But I'll highlight towards the end maybe some areas that kind of got a little bit more pressure. But we did see them pull back about the third straight week of losses. So we saw the Nasdaq off about 5.5%, the S&P and Russell pull back about 3%. So 7 of the 11 S&P sectors lost ground. Now that wasn't every sector, 7 of the 11. So we're seeing a bit of a rotation. Who are the biggest ones or the biggest sectors pulling back? Technology and consumer discretionary. They were off about 6 and 4%. We did, on the other hand, see crude oil futures spike above about 85.5 as Israel launched a retaliatory strike against Iran. We also did see gold pull back because it's been a real leader here, but it still finished the week up about 2%. U.S. Treasury yields eased slightly as we entered into the weekend. We did see some positive economic data and somewhat hawkish comments from the FOMC members. On top of that, we saw U.S. retail sales increasing about 0.7% in March, and manufacturing activity continued to expand in April. So on the FOMC member comments, we did see the Fed Chairman Powell make a comment. General, I'm just going to summarize what he said. He's not feeling super duper confident that with all these strong economic numbers, that it's laying the groundwork or giving a great runway for them to be very aggressive about lowering rates. I don't know if that's a huge surprise because the statement also made a comment that they're probably planning on keeping rates higher for longer. Now, again, it's always going to be data dependent. I don't know if that's a huge surprise, but it does spook the markets if the market is anticipating the Fed to lower rates, if it's going to be longer when it happens. But we did see, because some of all this and where rates are, we saw mortgage rates slowing housing starts. We did see existing home sales in March pull back a bit. If we go overseas, we saw Japan's core inflation eased in March. But on the other hand, we saw UK's CPI rise by about 3.2% year over year in March, but that's still the lowest level since September of 2021. But we did see wage growth, and that's what we want to try to get down, not just in the United States, internationally. That was up about 6% year over year, so a bit hotter than what was expected. European Central Bank members still are forecasting 3 reductions in 24 with their interest rates. I'm sure it's data dependent, just like ours. Germany's economic sentiment jumped a good bit in April, and China did report better than expected GDP growth of about 5.3%. I think one thing that kind of hit home a little bit is that we did see the Monetary Fund, or the International Monetary Fund, raise their global growth forecast slightly, but they did warn about the U.S. massive fiscal deficit as well as China's government's debt and how that could increase risk with the world's economy, since we produce and consume a lot of goods between our two nations. Looking at this week, we got a lot of economic numbers. We're looking at global flash PMIs. Readings are coming out, U.S. GDP numbers, inflationary figures, all this great stuff. Keep in mind that maybe we're expecting GDP to come down in some aspects to about maybe 2.5%, but we finished fourth quarter of 23 at 3.4%. So this economy is still humming along, right? Not giving, again, the Fed a lot of runway to be aggressive about lowering interest rates because maybe they just don't need to. While, the consumer spending, earnings, the economy is still humming along so well. But we are wrapping things up, not literally wrapping them up, but my call today would be wrapping up some things, just talking about some earnings. I mean, we got some pretty big heavy hitters. We got a lot of earnings coming out this week and next. We got United Postal Service, Tesla, Meta, Microsoft, Intel. A lot of numbers will be coming out this week. Jeremy?
Gotcha. Well, I had a question for you, Graham. You mentioned last week while you were gone, the volatility that we had and the pullback. Do you see that think that's it, or do you think we have some more to come?
Well, I definitely don't want to draw the line in the sand and say that's it, because listen, it's not unusual to get 10% corrections. I mean, they're pretty standard. So I wouldn't be surprised that, if this 5+% pullback in the S&P ends up going to 10 and change. But that will also be predicated on where interest rates are, where inflation numbers are coming out, where the earnings, because we're really starting the heavy hitters in the earnings season coming out right now. So that's going to set the stage for that. But I think one thing I want to leave with on the comment is that you don't have to have a massive market pullback. What about a rotation within? And that's kind of what we saw last week. We saw the real leaders like consumer discretionary and technology. I mean, the Nvidia was down 10% on Friday and the Nasdaq was off too. I mean, that's massive because they've rallied up so much. But what did we see on the flip side? We saw the more boring stuff, utilities, small caps, mid caps, equal weight S&P compared to a cap weight S&P up, while the S&P was flat to down. So I think you're getting a broad, obviously a broad rotation. Hopefully that will continue and buoy the market up.
Gotcha. Well, thank you. We always appreciate the information, Graham. And to our listeners, we do have our retirement planning today classes coming up that Graham teaches. It's a 2-day A to Z in retirement planning coming up here at Marietta Community Schools. So if you or someone you know or neighbor would like to attend that, you can go to our website and check it out, or on our social media, or call the office. And those are coming up on Tuesdays, May 7th and 14th, and then Saturdays, May 11th and 18th. So just check out all our socials and our website, and we'd be glad to have you. And again, we appreciate it, and see you next time.
Take care.